FinVolution beat Wall Street consensus this quarter. Q2 revenue hit RMB 3.4 billion, so that's about 501.6 million US dollars, and that topped the $470 million estimate.
Yeah.
And non-GAAP earnings cleared projections by 1.8%, with GAAP EPS coming in at 43 cents.
Right, but the forward guidance is where the narrative just sharply shifts.
Hold it.
Because management reiterated their full year 2026 revenue guidance of 11.5 to 12.9 billion RMB, but they explicitly warned investors that they actually expect to land at the lower end of that range.
And the market absolutely hated that forward-looking commentary.
Yeah.
I mean, shares plummeted over 10%, down to $3.61 in the post-earnings session.
Yeah, a massive drop.
So we've basically got a backward-looking beat and a forward-looking punishment. It's essentially like throwing a party where everyone tells you the food is amazing, the music is great, and then they all immediately leave and give you a one-star review.
That is exactly what it is.
So to figure out why a seemingly great quarter triggered this massive stock crash, we need to unpack the segment data and, look under the hood of one of China's largest fintech micro-lenders.
Yeah, and the divergence in the underlying data is just staggering once you start to break it apart. Because if you just look at the Q2 China metrics on paper, I mean, they were really solid.
Yeah.
Domestic loan volume was up 6.5%, and revenue was up 8% sequentially.
But reading those Q2 numbers, it kind of feels like looking in the rearview mirror right before a highway pileup. Like the past looks perfectly fine, but it completely misses the incoming collision. The domestic data from Q2 is essentially obsolete because of what happened right after the quarter closed.
Exactly, which is what makes their overseas segment the most crucial hedge they have right now.
Right.
Overseas revenue is up 18% year-over-year to 930 million RMB. It actually now accounts for 27% of total revenue.
Wow, 27%. And their overseas operating profit actually more than doubled year-over-year.
Yeah, it did.
And that's with them deliberately pulling back their operations in the Philippines.
Well, they scaled back there mostly to absorb the impact of these new interest rate caps.
Oh, right, the regulatory caps.
Yeah, imposed by regulators over there. But the structural growth they're seeing in Indonesia and their early expansion in Australia, I completely filled that gap.
That makes sense.
So the overseas business is really proving it can balance growth with profitability. It's functioning as a highly effective second profit engine, while the domestic Chinese market just, stalls.
Well, let's talk about that stall in China, because that is the real story driving the stock drop.
Definitely.
The main catalyst for the weak guidance was the Jizzy platform incident, which happened in July.
Right.
And for those who missed it, Jizzy was a domestic peer lending platform that just suddenly collapsed. But I have to push back on the math here.
Okay.
Because FinVolution has 12.5 billion RMB in total liquidity.
They do, yeah.
So why would they let their own origination volume crater by a staggering 50% just because some smaller competitor failed?
It's a really fair question.
Help me understand the mechanism there. Like, how does one platform's failure freeze a giant like that?
Well, it really comes down to how micro-lending is actually funded in China. You see, FinVolution doesn't just use its own money to fund all these millions of loans.
Right, they aren't the sole bankroll.
Exactly. They act as this sophisticated bridge. They heavily rely on massive institutional banks to supply the underlying capital.
Yeah, that's it.
So when Jizzy hit the wall, those institutional funding partners just panicked. Risk suddenly became incredibly opaque to them.
Ah, so they paused everything.
Yeah, they paused capital supply across the entire sector so they could conduct internal self-checks and review their exposure. The institutional capital spigot just shut off overnight.
Okay, so it's basically like a bank run. But instead of retail depositors lining up to pull their savings, it's giant institutional banks freezing their credit lines all at once because they saw the business next door catch fire.
That is a perfect way to visualize it. And you have to remember, when capital supply vanishes, the price of whatever funding is actually left in the market just skyrockets.
Oh, basic supply and demand.
Right. So FinVolution saw their funding cost jump 30 basis points. Borrowing money suddenly got significantly more expensive for them in a matter of days.
Wow. So how are they handling it? I mean, with volumes down 50%, they obviously aren't just sitting on their hands.
No. They are utilizing that 12.5 billion RMB war chest you mentioned earlier to essentially wait out the storm.
Okay.
Management made a strategic choice to prioritize asset quality over scale right now.
Makes sense.
Yeah, so they are tightening their underwriting standards, and they're relying on their own cash cushion to fund only the highest quality repeat borrowers until that institutional confidence returns.
This really brings up a critical lesson for anyone looking at fintech or financial stocks right now.
Absolutely.
When sector-wide contagion hits, a massive liquidity cushion isn't just about baseline survival. I mean, it's a strategic weapon.
Yeah, it lets you weather the hit.
Right. You can afford to step back, let your volume drop, and let the broader market sort itself out without, going under.
Because the smaller, undercapitalized microloan platforms, they just don't have that luxury.
Right. They can't afford a pause.
No, they operate on these razor-thin margins without a massive cash buffer. So a capital freeze like this will likely wipe a lot of them out completely.
Which really sets up a fascinating dynamic for the rest of the year. Make sure to follow the show for our daily earnings coverage, by the way, because we will definitely be tracking this sector closely.
For sure.
And I want to leave everyone with this final question to think about. With smaller, undercapitalized platforms failing or exiting due to this funding freeze, will this short-term crisis ironically hand FinVolution near monopoly pricing power when the institutional capital inevitably returns?